This one now, the country's economy experienced some positive growth in the last 3 months of 2020, but it could not escape the chokehold of COVID-19, with economic growth shrinking by an expected 7% last year. Our business editor, Devan Murugan, joins us now live. So, Dev, this, of course, was largely expected, but these figures are now historic. What's the value?
Yes, good afternoon, Chahan. You're quite right. They are figures from last year telling us that this economy has shrunk by 7% last year. The reason why we value this is because it is empirical. So far we've had estimates. They really inform policies of the government. They inform investors on what their investing potential is. So if you look at that on screen, minus 7%, that doesn't spell well for any investor coming through. Granted, this was COVID-19 induced most of the time, but as we've said time and time again, this economy has a structural problem, and if you eliminate COVID-19, we still would be in the depths of low growth in this country. That just puts an official figure on it, Jahan.
Yeah, so the president, of course, spoke of shoots in the economy. Is that something we can see in the figures?
It did happen last year where we saw, the gates opening on the restrictions brought down by the lockdown. So one or two of these industries, and you'll see that in a moment, did experience a large bout of expansion. You'll find that the manufacturing sector, for example, in the last 3 months of the year, look at that, up 21%. You look at construction again, that saw some gains in the last 3 months of the year, 11% up. And then, of course, trade also in the green. But remember, these figures are coming from a low base. That's why these numbers seem to be so expansive. You look at the mining industry, it says it shrunk by 1.4%. Remember, mining was already operational, so it came from a high base. That's the thing. Now, green shoots, yes, there is. The question is, how sustainable is the activity in these various sectors to ensure that jobs can be made in the economy?
So obviously we all recall that ambitious national development plan which aimed to eliminate poverty and reduce poverty by 2030. Of course, this growth rate would not help that.
No, it wouldn't. And I think the point that the National Development Plan was trying to make, and in its early stages of being sort of drawn up, was that if we could get a growth rate by about 5%, we will reverse the unemployment trend in this country. Look at that picture in front of you. We are now sitting at minus 7% in our GDP. That's the latest figure, as we said, last year. We need a growth rate of 5% to reverse the unemployment trend. It is a very huge task to get there. It depends on whether or not all of the stakeholders in the economy, the unions, government, business, come up with one action plan to get those structural issues off the ground. I speak of energy reliability. You're looking at spectrum that needs to be released, the policy uncertainty around worker-company relationships and the wage, for example. If that's not targeted and well-defined, getting that 5% by 2020 would be a very difficult task.
All right, we're going to leave it right there. Our business editor, Devan Murugan.